In our latest video on trading biases, we're going to look at just why it is people can't trade with the trend and what we can do to try and fix that. Hello, I'm David Jones from Capital.com, and this is one in a series of videos where we're looking at common trading bad habits or trading biases. Within our trading platform at Capital.com, we have an algorithm that tries to detect certain biases within traders, maybe ways that are going wrong, bad habits they've developed, and try to push them in the right direction. A really common trading bias is trading against the trend. We all know when we first start trading, one of the things we hear is the trend is your friend. But it's something that so many of us have problems in doing, in trading within an existing trend in a market. So let's take a look at just why we have these problems, and secondly, what steps we can take to try and force ourselves to go with the main trend in a market. Let's explore this bias that people have for trading against the trend. Markets trend. This is a fact. So markets will trend up, a bull market, down, a bear market, or sideways where they're just trading in a range. And the reality is most traders will trade against the trend. They see a market that's going up, they'll try and pick a top. They see a market that's falling, they'll try and pick a bottom. I think it's part of human nature. So most traders will end up the wrong side of a trend, and of course that will result in them losing money. So what we need to do is have a simple approach for identifying the trend to try and help us trade with that trend. There's a couple of easy ways of doing this. Probably the most straightforward is trend lines. We'll take a look at this in a second on a real chart. So identifying a rising trend or a falling trend by using trend lines. A more mathematical way of doing it is using moving averages. And again, we'll look at a couple of examples of this on real markets. So here's our chart. This is pound US dollar. Clearly, just by eyeballing this chart, this is from, we're looking at the lows from here, March 2017 through to, when's this, January 2018. We can eyeball this on a daily chart and see the broad trend of the market is up. Let's draw a trend line on this. We'll access the drawing tools from here. Scroll down and pick trend. In an uptrend, the trend line sits underneath the lows. There we go. So the assumption is any weakness back to the trend, we're expecting this trend line to hold the market up. Let's just walk forwards and see what happens. So we can see the market does move higher from here, sells off, comes back to the trend line and moves higher again. So trading with the trend would have been the least painful approach here. We're putting market momentum on our side. Let's take a look at a downtrend. So again, we're sticking with pound US dollar. Clearly, in this period we're looking at here, the market had been falling. The trend was down. So let's draw our trend line. So in a downtrend, the trend line sits above the highs. So the assumption is any strength from this market back towards 133 would expect the sellers to come back in. Let's just walk forwards. We can see the market rallies, but then continues the move lower. So here we would have profited from trading in the direction of the trend. Obviously it's not going to work all the time, but using trend lines is a really simple way to reinforce to us what the time frame of the trend is for the time frame that we're looking at. So to try and make us trade in the direction of the trend and not go against that trend. Let's take a look at moving averages. So we're back on pound US dollar. Let's add a moving average to this chart. I'll go to indicators. Moving averages are in most popular and the trend section. Let's go to moving average. As usual, you can choose the period you want that fits in with your trading approach. Let's say we're going to go for a 50-day moving average. Here we go, pound US dollar. So it broke above the 50-day moving average in November 2017. And continue to rise. So while the market is above the moving average, the assumption is the market is in an uptrend. So again, what we want to be doing is looking to buy in. We had some choppiness here, and this is the drawback of moving averages. If we have a market that starts to go sideways, it will chop around the moving average. But then a sell signal here in April 2018, where the price fell below the moving average. So again, the assumption is while it's below the moving average, it's in a downtrend. Okay, so there's another simple way of trying to identify and highlight trends in the market that you're following. So whether you use a moving average or a trend line, put something on the chart that just reminds you which way the trend is going and forces you maybe a bit more to trade in that direction. We have plenty of other videos on trading biases and other information such as market outlooks, trading strategies, this sort of thing. But for this particular section on trading against the trend, from me, David Jones and Capital.com, we'll wrap it up there.